We are referring to the buying of gold that started in Asia, did not abate in Europe as it frequently does during London's gold fix, and then accelerated once again in the US, driving the market at one point up $110, essentially unprecedented.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and this is the Gold Fix Market Rundown. Today, we will be discussing yesterday's panic. That's what we called it. That's what it was. And we're looking for approximate reason for it. We are referring to the buying of gold that started in Asia, did not abate in Europe as it frequently does during London's gold fix, and then accelerated once again in the US, driving the market at one point up $110, essentially unprecedented during a time of peace. So we're going to go into how the US intends to isolate China from the rest of the world and how Brussels properly panicked as a result. First, the markets. 10-year yields are unchanged bid. The dollar is 99.55, up 28. The S&P 500 is 53.07, up 38 after getting destroyed yesterday a little bit. The VIX is 30.93, down 170. Gold is 33. It's getting hard to say that. 33.25, down 17. Silver is 32.48, down 26. Well off its lows, I think. Copper is 458, down 6. WTI is up 88, 63.37. Natural gas 322, down 4. Bitcoin 84.7, up 700 and change. Palladium 950, platinum 960, down 19, down 8. Gold, silver 102 after yesterday's move. Grains are all up. Soy and corn up 25 basis points, 1038 and 480 respectively. Wheat 563 and change, almost 564, up a little more than 3/4 of a percentage point. There's the front page. There's the stories we put out yesterday. I guess this story is going to be, this analysis is going to be a combination of the first two there. Gold 3,300 and the panic, as well as something that Michael Every wrote from Rabobank. We titled it Team China versus Team USA. And it was actually a very good piece on the geopolitics of the Scott Bessent doctrine, we'll call it. The rest of the stuff there is excellent. Hartnet's clients are so bearish, I'm going to guess that he might actually start to be bullish on his weekly report, but we shall see. All right, here we go. Analysis. The U.S. targets China partners in Brussels, properly panics. Unlike past crises that triggered coordinated global responses, this time there's no real prospect of policy alignment. That absence of geopolitical cohesion is a risk premium in itself. That's from Gold 3,300 in the beginning of panic. Here we go. According to the Wall Street Journal, the architect behind the latest U.S. trade strategy is Secretary of the Treasury Scott Bessent, who has taken a leading role in negotiations. There's Scott. Continuing, Bessent pitched the concept to President Trump during an April 6th meeting, parentheses, no, he didn't. They've been doing it for like the last 3 months, but they just pitched it publicly on April 6th at Mar-a-Lago, according to sources familiar with the discussion. His argument, extracting concessions from U.S. trading partners would prevent Beijing and Chinese firms from circumventing U.S. tariffs, export controls, and other economic restrictions. Open parentheses, you may or may not remember we said about 2 weeks ago that the U.S. is trying to get the rest of the world to join it by making China pay all the tariffs by implicitly. There's the Wall Street Journal headline. The tactic is part of a broader Bessent design strategy to isolate China's economy. While internal debate continues over the scope and intensity of tariffs, consensus among Trump officials is coalescing around Bessent's plan. Next, excuse me. Pardon the pause. A window into the panic room. As stated in Gold 3300 and the beginning of panic, I think we already said that. Unlike recent crises that triggered coordinated global responses, this time there's no real prospect of policy alignment. That absence of geopolitical cohesion is a risk premium for gold in itself. Each country, each central bank, and each investor must now hedge not just the volatility of the market, but the fragmentation of potential coordinated responses. That recognition, we believe, triggered a shift that most people who understand gold and read this publication already know it. But nations, those sensible people, realized no one would rescue them. The result, escalated de-dollarization efforts and contingency planning for economic warfare. Gold rallied accordingly. Call it fragmentation, deglobalization, multipolarity, or mercantile protectionism. Your nation's leaders just realized they're economically on their own. In that little bubble they live in, it was pierced yesterday. The Trump-Bessent announcement was the catalyst for this recognition. The Wall Street Journal describes the mechanism, or describes how the U.S. plans to do this. The U.S. is actively pressuring trade partners to help isolate China in exchange for reduced tariffs. The pitch, secure commitments from over 70 nations to close the transshipment loophole, bar Chinese firms from evading tariffs by relocating, and reject China's low-cost industrial exports. The pitch, if China pays the tariffs, you won't have to. That's the idea. There's a Wall Street Journal picture of a shipping lane, shipping containers at a port in southern China. Next, these steps are designed to choke off China's export avenues and further destabilize its manufacturing sector, already showing signs of stress. Ironically, or paradoxically, China's Q1 exports rose as buyers rushed orders ahead of tariff hikes. This momentum is expected to reverse sharply under the full weight of U.S. actions. The U.S. strategy is to use Trump's known sequencing, as we describe it. Gain leverage through alignment first, then isolate China before any potential Trump-Xi negotiation. Individual demands will differ, but the core principle is binary alignment. Choose Washington or choose Beijing. Sources told the Wall Street Journal the approach has already been introduced. Trump publicly hinted at the binary choice during a recent Fox Noticias interview following Panama's decision to exit China's Belt and Road Initiative, a likely case study in this emerging doctrine. Washington's goal is strategic use of a Trump. We already said that, didn't we? All right. We must have duped our writing there. Okay, so China responds to this. China responded in ways that we don't know, but one of the ways we know is they immediately started buying gold, selling treasuries. We don't know that they sold treasuries. We'll know in a week, but based on what happened on the 11th, they sold treasuries. And signaling to gold-holding trade partners, other BRICS nations, that this U.S. move had been anticipated, just like every move prior. China isn't just for real this time. We'd like to just take a pause here and just say, this is not new. Everything the Wall Street Journal laid out had already been mapped in this space using terms like peel off and horse trading. Pardon the construction behind me. It was described as part of the carrot and stick framework driving Trump-Bessent strategy ahead of the real confrontation with China, the only trade war that matters to the U.S. To summarize Trump's approach, Trump begins as bad cops to allies and friendly or not so bad cops towards adversaries. I think they're coming for me. After securing quiet concessions from nations like Canada and Mexico, his leverage grows. At that point, global tariffs are activated, or already active, I should say, and trade partners are peeled off individually through pressure or private deals. This is Trump's 101 horse trading stuff. The remaining countries, those with no value to the U.S. strategically, and likely facing economic stability, hopefully, are left isolated, weighing down China like a dead albatross. That's the plan. This is exactly what Scott Bessent confirmed to the press yesterday. Things that were shared here over the last 2 months. Next, and we're happy to be right, but we're not happy that it's happening. Let's put it that way. Let's go into the actual marketplace itself. This is all inspired because of the behavior of the market yesterday. Bought in China, bought in Europe, and then rebought in the US. The panic was triggered among global leaders, not because the US strategy was new, but because it had been publicly declared. That shift from ambiguity to clarity forced even insulated financial institutions to acknowledge that the old world order is not coming back. That graphic there is a graphic for Bank of America that we're kind of fascinated with. Most of the banks that are writing research right now about the situation in one way or another are touching on the concept of rebalancing of global central bank reserves. And Bank of America put a point on it saying that using efficient frontier analysis, that global central banks should be at about 30% if they want to properly diversify dollar risk without diluting their ability to protect their countries. And the comment was right now they're about 10%, and that it would take 2 to 5 years to buy this if they were to do it steadily. But we know that things don't get done steadily. This may happen in 2 years, and that's a tripling of gold reserves. In responses, so that's the graphic. In response, those same institutions must now recalibrate not just their thinking, but their balance sheets to reflect a multipolar reality. Less reliance on the US dollar and greater exposure to neutral assets like gold. The realization, combined with China's immediate countermeasures, sparked the panic. Conclusion, unfortunately, this is going to go out there, but this is where the puck could be if this shit doesn't get fixed. Without collaboration, risk premium and fragmentation premium turns into war premium. As noted earlier, call it fragmentation, deglobalization, mercantilism, or protectionism. The bottom line is this: each country now stands alone. The absence of geopolitical coordination is itself a risk premium, propelling gold higher. In the future, economic reconnection or realignment may come, but not from strength, from necessity. When the world finally realigns, it may not just be for trade, but for survival. At that point, gold's risk premium may evolve into a war premium. That's where we're headed. Let's go to the markets. Gold's down 17. A healthy retracement, I guess, is what they would call it. Here's the daily chart, hourly. I'm going to go back to the four. Before the machines come and get me. All right, so it's 8:53 now. The data is out. Whatever that data was, it's in the report, it's in the post. But you can see that stocks probably did not like the data. Gold did not like the data. Silver liked the data. Interesting. So it might have been hot economic data. We can find out for you presently. No. Okay. Don't see it. If you look at the economic versus non-economic assets, everything today, with the exception of copper, actually, you're seeing a bifurcation along financials and physicals now. So stock market is up, bond market is stable, the dollar is mildly firmer, a little bit of an American exceptionalism, minor stuff, but it's there. And at the same time, you've got, you know what this whole day is so far? Taking profits and booking losses. All right. If you were short the S&P, you're buying it. If you're a buyer of dips in the S&P, as Zero Hedge recently noted, a lot of insiders are buying, you're buying it. If you're long gold, you're selling it. Silver, you're selling it because you're long gold. There's always a reason to sell silver. That will bite them in the ass pretty soon this time. As I said, silver is dangerous to be short right now. We'll see how soon I'm right. That's it. We have a lot more in premium. Stay tuned for more developments. To summarize today, so far, at least our observations, yesterday's panic in gold buying that was initiated by global leaders figuring out they stand alone if they don't stand together was likely initiated because of Scott Bessent's public declaration of his plan and China's immediate, unhesitant response to buy gold and likely sell treasuries. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.